Hey guys, welcome back. In this video, we're going to be talking about POIs. Okay, POI simply means point of interest. Others might call it areas of value or psychological level or areas of interest, as people might tend to give it the name. Okay, I realized that sometimes when to enter the market from when to place an order in the market to enter a position of either a buy or a sell is as difficult as trying to analyze the market. All right. And hence is the reason for this video. So if you are new to this channel, I encourage that you hit the subscription button so that whenever we drop important content like this, you can receive the notification. And if you have any question, just drop it in the comment box. I will do my possible best to provide answers. So without wasting our time, point of interest are nothing but where you are considering to make an order in the market, either an order for a sell or an order for a buy. Okay, when you look at this market, this is how a typical chart looks like. This is more like a real life chart. All right. So what happened here? This is a very strong zone. What happened here is that the market, this is a bullish market. Well, how do we know that it's a bullish market? I've explained to you before now how you can identify a bullish market or an uptrend market. So please, if you have not watched the videos on market structure where I talked about the three move that you can see in a market, you have to go back and watch this video for better understanding. And if you've not watched the one of complex market structure as well, you should watch it so that you'll be able to understand that all these things you're seeing here are just pullback in the market. All right. So the market is creating series of higher highs and higher low. This is a low, a high, a higher low, a higher high, and then you see this. All these are known as internal structure. They are pullback. They are complex pullback, and because of this complex pullback, that we have a term known as what complex market structure, right? So, and because this is the highest point the market came to before this swing point was broken, because there is a break of structure around this region. There is a break of structure here. There is a break of structure here. There is also a break of structure around this place. You see, the market is breaking structure to the upside. The market is breaking structure to the upside. What happened is that when the market comes to this particular place to create this low, it fails to take out because of what there is a zone here. There is a resistance. At this point, this zone is serving as what a resistance. And what we see is that the market crashed down. And at this point, what we now have is that this place become our new higher low. Okay, this place become our new higher low. Here, this point become our new higher low. No longer, it's no longer this one again, because this which we think is going to be our new higher low failed to take out this particular highs, which means it is no longer our higher low. Here is the one, because this particular low break this previous higher high to create a new higher high. So as a trader, you are not expected to make entry from just any areas in the market. There are psychological points or important level, which I call POI, points of interest, where you are looking to make entries from, all right, which you want to pay attention to. So in order for me, the reason why I indicate this point here is because this is an area where I would have made an entry for what? A buy. Okay. What is my reason? There's a video where I talked about complex trading and trend line. Please, if you have not watched it, please, you have to go back and watch the video to help you improve in your analysis skill and your decision making in the market. So look at this. I have this trend line. I have this trend line here. And what I noticed is that the market respected this trend line for the first time, respected it again for the second time, and it's respecting it again for the third time. Aside that, there is a zone here. There is a resistance and a support zone. There is a zone here that the market has also been respecting. So this is a complex trading. This is a point of interest. Okay, this is a POI where I want to take a buy from. So if I am to make an entry from here, my entry, I'm going to have a long position here. I'm going to have a long position here. Put my stop loss somewhere around this region, and then take the market all the way up. Okay, so now you see me creating another point here. What my observation now is that this trend line has been broken. Okay, this trend line has been broken. So suppose I have something like this. The market break this trend line and break this support to the downside, and then I observe that the market go back to retest this particular zone. What I want to do is I will make an entry from here to take this market all the way down. Okay, I can also find a point where I want to stack another position. Okay, I have to look for another psychological area, because as I'm looking at this level, as I'm looking at this point, this is also a good level, because you see the market, what you respected this point, key down, broke it, retest it, went up, and then which I can actually consider this as a faker to tap into this trend line and then crash all the way up. Now you see the market came to the particular level again and went back to retrace this before crashing down. So I can also expect that market will come back to retest this zone, and I will also have a second position all the way down. Okay, so these are important levels where you want to make entry into the market from. Okay, so like I said, your POIs could be your support, it could be your trend line, it could be your Fibonacci level, it could be your support and resistance. So these are important levels where you want to make an entry from. There can be a point on your chart patterns, probably the head and shoulder. You're expecting to make an entry from. You're expecting to make an entry from what the neckline of a head and shoulder, or probably if you are trading flag and you are expected to make an entry from either the resistant part of the flag or a break and a retest to the support. All right, so if you have not watched the video on chart patterns for you to get yourself acquainted with some of these things I've mentioned so far, you should be able, you should make sure you watch the previous video. And if you are new, do not forget to subscribe so that you will not miss out on our important videos that are coming up. Okay, so I will just show you how I apply some of these things on my chart. Okay, so this is a trade I am on currently. You can see, you see how I mark them out. See how I mark out all these zones. These are important zones because I see the market respecting them, and then because of this breakout, and I observed that there was a retest to all of these zones, I have to, position myself that once this market break down, or I don't want to, start rushing after the market because of FOMO, the fear of missing out. I have to be patient because I know that the law of price action states that for every impulsive move, there must be a corrective move. All right. And then when the market break a particular important zone, tendency, higher chances are there that it will definitely come back to retest that zone. And what do we observe here? You can see how price actually came all the way to this particular place to retest that particular zone. And immediately I make this observation considering my candlestick pattern, and then I took it from here. So currently this trade is already in profit. Then I also have another one. Okay, this is my bias on step index. So this is just an analysis, and all these zones here are my POIs. Okay, these are my POIs. These are my POIs. I'm expecting two things from here. This is a bearish flag. If the market do something like this, I want to make an entry. If the market break out of the bearish flag and retest this particular zone, this is why I call this place as what? My POI. All right. Then I can actually make an entry to sell, or probably wait for a conservative entry. Conservative entry is when you see that the market has broken out of all consolidating zones and you now have higher chances of what? Of taking that particular trade without, you don't have much doubt again. Okay, so I can actually take that all the way from this place. Okay, this place become my POI as well. This is also my POI. And the second thing I'm looking at as a trader or as an analyst, you need to be what? You need to be smart, and you have to think in probabilities. You don't have to think in one direction. Okay, so what if the price does not break to the downside and it decide to break to the upside? I'm also looking at it because this is a trend line that the market as we were expecting. There was a touch here, there's another touch, these are other touches, and then what I observed, that the market break out of it and it now came back to retest it. So chances are there that the market might eventually start moving from here all the way to this place. So I'm looking out for my candlestick confirmation. If I see a good candlestick confirmation that will tell me to place an order, I am going to make an entry into this market for a buy, and which means that I can enter the market from here and take it all the way up, putting my stop loss just below my entry. Okay, so that's that about that. This is also another trade that I have running in profit. You can see how my POIs have been, how market is reacting to all of these things. All of this line, horizontal line you've seen, they are representing my POIs. Okay, so you don't want to take entry from any area, just any area in the market. There are important places you should pay attention to. So that is my emphasis this night in this video. So I hope this video is helpful. Make sure you hit the subscription button if you're new, and don't forget to hit the like button. And if you have any question, drop it on the comment box.